Ready to unlock some investing secrets? Let's dive into The Intelligent Investor by Benjamin Graham. This book has helped so many people over the years reach financial success. Welcome to Mindful Moments. Nourish your mind on the go. This video uses AI narration to present our original book analysis. Now, most people know Graham as the father of value investing. But the really cool part is how he changed investing from just gut feelings and speculation to a much more disciplined approach, almost scientific.
Yeah, for sure. Graham believed that anyone could become a successful investor. It didn't matter what your background is. Just understand the key principles and apply them, that's all.
He makes a really interesting point, about different types of investors. Talks about defensive investors and enterprising investors.
Yeah, okay.
Defensive investors really want that safety, those steady returns. But enterprising investors, they're willing to take a bit more risk for those bigger gains,
Makes sense.
But even for those risk takers, they still need discipline and a deep understanding of how businesses work. That's critical.
Totally.
One of the best parts of this book is the idea of Mr. Market. This imaginary person who represents the crazy ups and downs of the stock market.
I love that part.
Yeah, it's brilliant.
So imagine Mr. Market is always trying to buy or sell stocks, right?
Yeah.
But it's all based on his mood that day. Some days he's super happy,
Right.
driving prices way up. Other days, total gloom. Prices plummet.
Totally.
And that's where it gets interesting.
Right.
You, the intelligent investor, you don't have to play Mr. Market's game. You can decide for yourself if his offers actually make sense. You do your own research, figure out what the company's really worth.
Exactly.
Graham talks about Inktomi back during the dot-com bubble.
Oh, yeah.
This company, valued at billions, but they never even made a profit.
Wild.
That's Mr. Market being totally irrational.
Yeah, and that's a great example. And this leads us to, the heart of Graham's thinking, value investing. He's saying that a stock, it's not just some random letters and numbers.
Yep.
It's a piece of a real company.
Real business, yeah.
And the intelligent investor, they buy stocks when they're on sale, basically.
Yeah.
When they're trading for less than what that company's really worth.
Exactly. And he gives you tools to find those undervalued companies. Look at the price to earnings ratio. Is it low compared to others in the industry? How's it been historically? Those are signs. He also wanted you to check out a company's finances, Make sure it's healthy, cash flow, debt levels, things like that.
And he gives some great stories, like when he invested in A&P, the grocery store chain. The market wasn't a fan, but it ended up making huge returns. Shows you what happens when you ignore the hype and focus on what a company's truly worth.
Couldn't agree more. Graham was all about patience. Do your research, understand the business, buy when it's a good deal. That's how you beat the market over the long haul.
Absolutely.
Yeah.
But he wasn't always about doing complicated analysis. What I found really cool was how he went after those super complex stock picking systems.
Yeah, the Foolish Four system. He completely broke it down, showed how it seemed successful, but it was all just picking and choosing data, ignoring the basics of good investing. Exactly. It's like those get-rich-quick schemes, They rarely work out.
Yeah, much better to have a solid strategy, something that can handle all that crazy market stuff.
For sure. And that's where his margin of safety idea comes in. Imagine building a bridge, right? You wouldn't just build it to hold the bare minimum.
You'd want to make it extra strong.
Yeah, exactly. Add in extra support, like a buffer for anything unexpected.
So you're prepared for the worst case.
Right. And Graham uses that same idea for investing. That margin of safety means buying a stock for way less than it's actually worth.
So if things go wrong, you're protected.
Yeah, it cushions you, even if you made a mistake in your analysis.
That's a great way to think about it. So it's not about avoiding risk altogether. It's more like managing it, being smart about it.
Mm-hmm. Exactly. And this brings us back to those different investors Graham talks about. For the defensive investor, the one looking for steady returns, he recommends a core portfolio. Good quality bonds and a mix of leading stocks.
Okay, so like a solid base.
Yeah, a foundation. For someone who wants to grow their money, but not necessarily beat the market,
Yeah, just ride the wave, but safely.
Exactly. He suggests keeping things balanced, like 50% stocks, 50% bonds, and then adjusting it every now and then to keep that balance.
What's that called again? Rebalancing?
Yeah, rebalancing. So let's say the stock market does really well one year, and your stocks are now like 60% of your portfolio.
Okay.
You'd sell some stocks and buy more bonds to get back to that 50-50 split.
So basically you're locking in some of those profits.
Yeah.
And moving to something safer.
Exactly. And the opposite is true, too. If the market drops and your stocks are only 40%,
then you buy more stocks.
Yep. To rebalance, it's all about discipline. It forces you to buy low and sell high. You're taking advantage of those market swings instead of letting them freak you out.
It's kind of hard to wrap your head around buying more of something that's losing value.
It can feel weird, yeah.
Yeah.
That's why you need discipline and a long-term view. Now, for the enterprising investor, Graham had some more advanced strategies.
Okay, like what? This is getting interesting.
He talked about bargain hunting, finding stocks that are super undervalued and analyzing special situations like mergers or acquisitions where you might be able to make a profit.
So, stuff for someone who has more time and knows what they're doing.
Right. But even then, he always emphasized those core principles. Do your research, understand the business, buy with a margin of safety.
So, no matter how much risk you're willing to take, those principles still matter.
Absolutely. And it's really cool how even when he's talking about investment funds, those ideas about value and low costs come up.
When he talks about mutual funds.
Yeah, even back then, he saw that a lot of those actively managed funds with their high fees and all that trading, they didn't actually do much better than the market over time.
So he was kind of hinting at passive investing, like index funds, the ones that just follow the market.
For sure. He knew that keeping costs low and just riding the overall market growth, that was a powerful strategy, especially for those defensive investors.
It's amazing how much of what he wrote back then still applies today.
Truly, his understanding of human nature, those market cycles, and the importance of discipline and value. It's timeless.
So how can our listeners use this stuff? Apply it to their own investments, I mean.
Well, if you really want to understand Graham's philosophy, I have to say, read The Intelligent Investor. It's a classic. It can totally change how you think about investing.
And for anyone who wants to keep learning, make sure you subscribe to our channel. We cover stuff like this all the time. Lots of good insights to keep your mind sharp.
We'll have a link below where you can buy the book. Don't miss out on this chance to learn from one of the greatest investing minds ever.
It's crazy how relevant his ideas still are. Even in this market, everything moving so fast.
I know, right? It shows how well he understood the core of investing and how people behave.
Yeah, like he knew that fear and greed, that's what drives the market. That's what causes all those ups and downs.
And the intelligent investor. They don't let their emotions take over.
So you got to have the discipline, right? Buy when everyone else is scared and sell when they're all excited.
Exactly. And Graham gives you a way to make those decisions logically, based on what a company's actually worth, not just what the market's doing that day.
And he was big on always learning, too. It wasn't like read one book and you're done.
Oh, no. For him, being an intelligent investor, it was a journey. You're always learning, always researching, getting a better understanding of those companies you're investing in.
So you got to stay curious. Keep adapting as the market changes.
Exactly. He believed a true intelligent investor is always wanting to learn more, challenging their own ideas, and changing their strategies when they need to.
And learning to read those financial statements, that's
Yeah.
important, right? All those numbers, they tell a story about the company.
For sure, Graham was really clear about that. Investors need to be able to understand those financials. The profitability, debt, cash flow, all those things that show you the real picture.
It's like connecting the dots, right? You got the big picture stuff, the management team, their competition, their long-term goals, and then the numbers. They either back that up or they don't.
You got to form your own opinion, not just rely on what other people are saying or get caught up in the hype.
So much of what he said about avoiding those common mistakes, it's still true today. Like, don't chase those hot stocks, don't get lost in those bubbles, and pay attention to the warning signs.
He really understood how people think and how those market cycles work, that those patterns, they keep repeating. And if we learn from history, we can make better decisions now.
So what's the one big takeaway you hope people listening will get? What's the core of being an intelligent investor?
I think it's about that mindset that Graham talked about: discipline, patience, always learning and focusing on value, not just quick wins. If you do those things consistently, it can help anyone, no matter how complex the market gets, and build real financial success over time.
And the best way to really dive into all of this, read The Intelligent Investor. We definitely recommend it.
It's a book that can truly change your financial life.
We'll put a link in the description where you can grab a copy. And hey, if you want more insights like this, make sure to subscribe to Mindful Moments. Hit the notification bell so you don't miss anything. Until next time, keep those mindful moments going.